what struck me is some of the downgrades that you got. And I just want to highlight one from Bank of America because I think it gets to the core of the issue that you're having to discuss. And it says, it isn't clear if any foundry has either the spare capacity to make Intel's multiple tens of billions of transistors or the desire to help a competitor. The result could be years of uncertainty, with customers at a minimum moving more share to advanced micro devices for risk mitigation. And that seems at the core of what you need to be addressing to investors and shareholders, et cetera. Help us understand it.
Well, first, Alex, I would just start with the role that we play for our customers is increasingly important. And therefore, with that importance comes a responsibility. And our responsibility is to deliver a predictable cadence of leadership products each and every year for our cloud business, for our enterprise business, for our PC business, for our network business, and for our IoT businesses. So that's the biggest priority for us. And right now, we have a very strong lineup in 2020, a strong product lineup in 21 and in 22. And as we think about our product roadmap for 23 and 24, we have real optionality. And that optionality is building those products on our own, in our own fabs, or evaluating the opportunity to do it in others' fabs and trying to draw a decision that will be best for our customers. And we'll make that decision in the upcoming next several months. But I think optionality of disaggregated design, which is a philosophy that we've embraced, it gives us ultimate flexibility about where to make so that we can leverage advanced packaging, is a real asset and a real capability for this company, not a sign of weakness. So we will make the decision through a lens of what's good for customers, what's good for employees, and what's good for shareholders.
Bob, good morning. It's Guy. I think what the market is trying to understand today is the timeline for that decision. Will that decision have been made in 3 months? By the time we talk next, and I look forward to that conversation, in 3 months' time, will you have made that decision?
Yeah, Guy, we're talking about high volume production in the 23 timeframe. So if you back off from that, either Intel or our third-party foundries will have to start to put that capacity in place. So it's at the end of this year, early next year, we expect to make a decision of if, what, and where we will put production either inside or outside.
How much? Can you give me a percentage? If, say, 20-25% of your current chips are outsourced, due to all the M&A that you've had over the last few years, what do you think you want that to be?
We don't necessarily start with a percentage. We start with a product and a predictable cadence of products for our customers. And from that, what disaggregated design means is we have the ability to take our chips from our fabs, chips from other fabs, assemble them together on a package or on an SoC, if you will. So making the best decision for our customers that will allow us to deliver high performance, predictable cadence is first and foremost. From that will imply when to use our factories versus others. Historically, we've been in the 15 to 20% range outsourced. I believe over time, given this enhanced flexibility, that percentage will go up, regardless of this decision that we'd make at the end of this year or early next year.
Bob, producing your own chips has always been seen as a competitive advantage for Intel. Is that no longer the case? And could you see a scenario where your fabs are no longer core, that you could potentially sell them off and get out of the manufacturing game entirely?
Having design and manufacturing together, we believe is a real competitive advantage. And it's really for 3 reasons. One, it gives the ability of our designers, our architects, and our manufacturers to co-optimize the intersection of design and manufacturing to get the maximum performance of products. So that's a real differentiator for us. Secondly, economically, having both design and manufacturing under one roof, we don't have to share the economics that an outsourcing decision would entail. And third, we control the supply, and we allocate our production as opposed to have somebody else's production allocated to us. So it's a very important aspect of the makeup of our company, historically and going forward. I think in the near term, how do we make the trade-offs so that we can convince our customers they will have a predictable leadership products from us in 23, and we'll ebb and flow that dynamic of what integrated design and manufacturing means in the future. I would expect that with advanced packaging technologies and disaggregated design, the IDM advantage, as we've called it in the past, will be more like an HDM advantage or hybrid design and manufacturing, where sometimes others will be making product for us, and we may be making product for others rather than just ourselves.
Okay.
So as our technologies evolve, we think this gives us much more flexibility and optionality to meet the primary criteria of predictable cadence of leadership products for our customers.
Bob, if you were to outsource more production, would you insist that that production remains in the United States, or would you be happy to see that production moving offshore?
You know, there's so many different criteria, Guy, that we'll evaluate. Predictable schedule, product performance, economics, risk management, i.e. where will that product come from, and supply assurance. How do we know for sure that the product we rely on others, that we can make commitments to our customers as if we make that product ourselves? So there's a multitude of factors that we are evaluating to get to the right decision in the near term.
You mentioned your customers a lot, and then I want to also switch to your shareholders as well. What might be good for the customer isn't going to be good for the shareholder necessarily, and I'm talking specifically about gross margins. And if AMD's gross margins are actually rising but yours are falling, and that's only going to get squeezed at least in the short term, how do you compensate for that?
Well, I mean, first, the gross margins for us are significantly higher than the other player in the industry.
But they are falling, Bob. They are falling, though.
And the diversification of our business is much greater, and the nature of the products that we provide are much broader. And we're not going to be solely focused on gross margin percent, Alex. What we're focused on is operating income dollars. And how do we expand the role we play for our customers, bring differentiated technology, and make more money for our shareholders? And we're not going to be a slave to a gross margin percent and turn our back on good ideas where we can deliver promises for customers and make more money. So that's the series of trade-offs that we'll go through so that we have a great proposition for customers and great returns for shareholders.
Bob, we don't have that much time left, maybe a minute, but I didn't want to let you go before getting your forecast on PCs. What kind of visibility do you have in terms of you might have good demand in the next couple quarters, but how sustainable is it, or is it a pull forward demand because of the work from home?
Well, I don't know if I'd characterize it as pull forward. What I would say is that the demand for PCs this year has been much higher than any of us anticipated. And 11% unit growth in the quarter for us is an outstanding quarter. 9% unit growth year to date is outstanding for the PC market. And I think what we're realizing, COVID-driven, but also the nature of the products that we're building, is the PC is going to play a more essential role in everyday life for consumers, to work from home, to study from home, to always be on, to always be connected. Mm-hmm. So our belief is the essential role of the PC going forward is going to be greater than it's ever been. And we tend to deliver the products that will allow us to get more than our fair share.